Hi guys, welcome back to another video. Today we are actually covering the stock market and what's going on with Trump's tariffs, whether it would actually cause a recession and a larger market crash. Currently taking off a flight right now, but I thought I'll do a little bit of coverage because the stock market is essentially tanking. We've just seen Japanese markets enter circuit breaker mode, which is more than 5% down. I think the Japanese market is already down 9%. I think likely we're going to see India move next and possibly the US. So today I'm just going to cover a little bit on what I think is wrong with the US economy in general. Like I've mentioned earlier, the US economy has a very narrow breadth. Essentially, it's very heavy reliant on tech. One thing that is a bedrock of a good economy, it tends to be its manufacturing sector. So when we're talking about manufacturing, we're talking about things that are in the Russell 2000, RUT. So fixing this isn't easy, and that's what I think Trump is essentially doing. He wants to actually broaden the economy as a whole and improve the entire US sector, all of their sectoral basis. So I'm not sure if you guys have seen this article, but essentially it says that Trump is trying to crash the stock market by at least 20%. So I still think we have another 10% down from here. Basically, it's going to cause a flight into treasuries. If you guys know, in my Telegram channel, I've been very bullish on TLT, which is the 20-year bond. The reason I'm bullish on longer dated bonds is that they are more sensitive to interest rate cuts. And right now you can see the 10 and 20-year yield as of today. Today is the 7th of April. You can see that it has gone down 2.5 to 3.5%. This will likely cause a direct increase in 20-year treasuries by about 2 to 3%. So today I'm expecting TLT to go to 97. It closed at 94 last Friday. So tariffs also is a way to incentivize companies to build in the US and to avoid having to pay them. So you look at what's happening with Vietnam recently. They are trying to negotiate with Trump to remove tariffs because most of Nike sweatshops are in Vietnam. So this will also affect a lot of smaller open economies. Like Singapore's Prime Minister said about the tariffs is that,
my fellow Singaporeans, I've said before that the world is changing in ways that will disadvantage small open economies like Singapore.
it's going to affect us because we are very heavy reliant on global trade. So what Trump is actually doing is actually better for the general population. Bidenomics, which was during Biden's term, really benefited the rich people because he basically just kept printing money, and the only people who benefit from these are people who have assets and who can keep seeing their assets appreciate over time when he keeps printing money.
You or Trump?
Is that a joke?
But what Trump is doing is actually giving money back to the people by crashing these equities market, because more than 97% of all stocks are owned by 8% of the US population. So where I see downside is probably a few more days. I actually think that we would look to have emergency rate cuts coming in soon after the circuit breakers possibly. So if Powell wants to actually do emergency rate cuts, now would be around the time to do it. I'm not here to tell you that it's perfect or that it's going to be a disaster. What I will say is that it is a deliberate attempt to tackle some structural issues with the US economy as a whole. If we look at this chart that's on the screen right now, I think we're at the halfway point of the stock market crashing, and this is also the halfway point where TLT is rising. You can see gold is taking a little bit of a dip in this chart, and you can see that that's because I've mentioned a few times on the Telegram channel that when stocks crash by that much, gold will tend to unwind along with equities because fund managers need to let go of their positions to cover their losses in equities. So what am I bullish right now? I think TLT still has to make that massive spike up, and that last spike up comes normally at the bottom of the equities drop, because that's when they have emergency rate cuts. So that's all on Jerome Powell, whether he thinks that it's time to do the plunge protection theme, we call it PPT, or the backdoor funding, or after normally a few circuit breakers where it's dropped heavily, it's also when they do quantitative easing at the bottom. So that's how we can, that's that margin before the neutral Fed funds rate. So to continue on that point, what do I think I can be looking to buy right now would be probably TLD, because we still haven't made that massive move up. Next, I would say gold and silver, because after that first drop that equities will pull commodities back, I think oil would suffer as well. Like I mentioned, you might be wondering, how did oil go negative in the last Trump's term? That's also because it's derivatives. People can't hold the outright holding cost of oil, and it can go negative in terms of derivatives. So right now, I would be looking to buy TLT if you're talking about if you're a short-term trader. If you're a mid-term trader, I think gold and silver on this next pullback will be a decent buy into, because I think we're going to go into a very big cyclical bull market for gold as they fight for currency devaluation, as other countries try to take more gold reserve to fight the hegemony of the dollar and to fight the reserve currency status of the dollar. I think gold is going to start taking its precedence. Same as crypto, actually. I think crypto will start cementing itself as a store of value and more like a precious metal and commodity. I think Bitcoin will transition from a speculative asset that is very tied to risk assets into something that is more tied to a store of value over time, and people will see it as a hedge against the US money printing. So in a long-term play, if you're talking long-term and you're just maybe a casual investor that is like, maybe you're working as a lawyer or engineer, or you just want to look into something that has a massive long-term play, I think I would actually be looking at Chinese tech and Chinese equities, because this is a very good opportunity to buy into China if you didn't buy in the whole bear market the last 2 years, because Baba was at 73 and it went to 145 where I sold aggressively. I think this is an opportunity to get into really good Chinese stocks. So what I'm looking at is probably like Neo and Baidu. So Baidu actually has $70 per share in cash compared to Baba's $30 per share in cash. And Baidu is actually trading 82 compared to Baba, which is probably trading at 110 today. So neither of them have businesses in the US, and they're also not affected by tariffs. It's just a very short-term pullback, and I think that when China starts printing money and the PBOC starts stimulating the economy, both have growing businesses in AVs, AI, and cloud. So I think the Chinese government will actually stimulate more in response to the tariffs to compete in terms of a currency devaluation. They want to compete to be more price competitive and to have to improve their trade balance. So yeah, and this next drop, I'll be looking to buy into Chinese tech. As always, if you like this sort of content, do remember to like, share, and subscribe. And leave a comment about what you think about this analysis. And I'll see you guys next time. Bye.